Hi, very good morning. This is again a very interesting judgment of Bombay High Court. Sundyne Pumps and Compressors India Private Limited versus Union of India. Issue is whether export of goods or services made by an Indian subsidiary of a foreign company, whether it qualifies for export of service or not. That is the first issue. Second is whether they can claim refund of unutilized input tax credit. So facts: Sundyne supplied engineering services and exported goods to its group companies or related persons situated outside India. Sundyne claimed a refund of the ITC credit on the ground that the ITC relates to zero rated supplies. Department denied the refund. They said the recipient is located outside India and are carrying on the business through agency of Sundyne. You are an agent of that foreign company. Even though you are an Indian subsidiary, you are an agent. Incorporated in India, you are an agent. Hence, Sundyne is nothing but an establishment of a distinct person. This we will come to know how important it is when we see the export of services. Sundyne submitted that the overseas entities are independent corporate entities outside India. They are registered under the laws of their own jurisdiction. I am registered in India. So we both have no relationship. So it should qualify as export of services. That is the argument of Sundyne. Department finally rejected the refund applications. Then they filed an appeal that was also rejected. So they filed a writ petition before Bombay High Court. Bombay High Court looked into various provisions of GST, especially export of services, export of goods, definition of agent, and then agreement between the parties. All these things they looked into. Then section 26 of IGST that talks about export of services. It prescribes 5 conditions. Most of you who are dealing with indirect taxes, especially GST, you will know. But for the sake of completeness, I am giving it. One is supplier of service is located in India. That is, Sundyne is located in India. Recipient of service is located outside India. That is also satisfied. Third is place of supply of service is outside India. Fourth is payment for such a service has been received by the supplier of service in convertible foreign exchange. Fourth. Then fifth condition is supplier of service and the recipient of service are not merely establishments of a distinct person in accordance with explanation 1 in section 8. So you cannot be a mere establishment of the another company. Then you are not entitled. That is the fifth condition. On this basis alone, department said, no, you are not entitled for refund. Department's contention was that Sundyne did not fulfill the last condition. That is, they are saying you are merely an establishment of a distinct person, of a foreign entity. Bombay High Court looked into section 811 of IGST. It states where a person has an establishment in India and any other establishment outside India, then such establishments shall be treated as establishments of distinct persons. That is what the explanation states. Then the definition of agency states agent is a person who carries on business of supply of goods or services or both on behalf of another. The department came to the conclusion that Sundyne is an agent based on the following findings. So that is also very important, the findings of the department. One is foreign party, that is foreign entity, exerts control over the Sundyne. He is the petitioner, writ petitioner. So the foreign entity controls the Sundyne. because Sundyne is nothing but a subsidiary of the foreign entity. First finding. Second, the managerial control vests with foreign recipient, and all the decisions of the Sundyne's business was taken by foreign recipient. This is the second finding. Third is the expenses incurred by Sundyne are reimbursed by the foreign recipient. Sundyne is remunerated on cost plus basis. Some markup is given. The markup is nothing but fixed commission being paid to Sundyne. That is the finding of the department. Then the fourth finding, books of accounts of Sundyne are always available for inspection to the foreign entity. They can come and audit also as and when required. Then fifth condition, fifth finding, the relationship between Sundyne and foreign recipient is of group companies, particularly parent and subsidiary. Therefore, fiduciary relationship between these companies are established. On the basis of these findings, they said no, your export of goods or services will not amount to export. They said, and they rejected it. Then Bombay High Court looked into the agreements and said that the agreement clearly provides that Sundyne is an independent contractor and that neither Sundyne nor its officers, directors, or employees or subcontractors, they are servants or agents or employees of the foreign recipient. So, as per contract, as per agreement, you are an independent contractor, Sundyne. Bombay High Court said Sundyne does not carry on business of supply of goods or services or both on behalf of another foreign recipient. Sundyne carries on business on principal to principal basis by employing its own manpower and other resources. As far as the markup at 110%, Bombay High Court said it is in tune with the general commercial practice and transfer pricing norms. That is generally it is the followed by many companies. Merely because it is fixed, it cannot be said it is a commission. Agreement does not contemplate any commission. That is what the Bombay High Court said. Then it observed that there is absolutely no control by the foreign recipient over the business of Sundyne. The clauses for inspection of books is only to facilitate verification that the costs are true and fair. The foreign companies wanted to check whether what you charge is true and fair. That is why they wanted to see the books of accounts. The clause does not make an Indian entity incorporated under the Indian laws an agent of a overseas entity incorporated under the foreign laws. Sundyne supplies goods and provides services on its own account. Bombay Court says, Department did not find any other person on whose behalf the goods or services were supplied to make them an agent. To become an agent, the person must be acting on behalf of or representing another. In such a case, there would be involvement of third party, which is absent in this case. That is what they are saying. So, if you have to establish agency relationship, there must be a third party. In this case, there are only two parties. One is Indian subsidiary, another is foreign recipient. So they are saying no, the third party involvement is not there. In any case, you have not established it. Then Bombay High Court said the agreement should be read as a whole and the intention of the parties should be gathered therefrom. In the absence of any agreement or arrangement, the principal agency relationship cannot be created. That is what the Bombay High Court said. Then further, Bombay High Court took note of CBDT circular number. I don't want to give the entire circular number. There is a circular dated 29/2021, in which the board clarified that to be covered under section 265, that is the condition, you should not be mere establishment of the same entity. So to fall under that condition, the supply of services made by a branch or an agency or representational office of a foreign company not incorporated in India to any establishment of the said foreign company outside India, which shall be treated as supply between establishments of distinct persons and shall not be considered as supply of export of service. That is, they are saying if the foreign company's branch office is here or a representation of representative is here who is not incorporated in India, then it will be treated as supply. It will not be treated as export of service. Similarly, in the case of Indian company also, the same logic will apply. The same principle or logic will apply. So the condition is you should not be incorporated in India or in the foreign company if it is an Indian entity. To put precisely, in this case, if you take Sundyne is incorporated under India, it is supplying to a foreign entity which is incorporated there. So there are two. It is not establishment of the same entity. They are two distinct entities. If it is only establishment between one branch office of the same company, then it will not qualify as export of service. That is what the circular said. BHC said that in the present case, Sundyne is not a mere establishment of the recipient of service located outside India by reason of supplies being made to sister or group companies or holding or subsidiary companies. Bombay High Court said the primary requirement to satisfy the definition of agent is that agent supplies goods or services or both on behalf of another person, that is third party to the transaction. Undisputably, in the present case, there are only two parties. One is Sundyne and the another is foreign recipient. Sundyne is incorporated in India. Foreign recipient is incorporated under the laws of that country. The court said by no stretch of imagination, Sundyne would qualify as agent. Hence, the finding of the department, the court said, is absurd and perverse. Court also said that during previous quarters, on the same set of facts, department examined and granted refund of the unutilized ITC. So the court said it is not open to the department to dispute the same when the facts remain the same. That is what court said, and it directed the department to refund unutilized ITC with interest. So my comments, one is if somebody intelligently makes an agreement containing these clauses, whereas the action carried out by that person is contrary to the clauses in the agreement, will that qualify as export of service? That is my first question. Is not substance more important than form? Secondly, even though Bombay High Court says there is absolutely no control by the foreign company, I don't know how and on what basis the Honorable High Court came to that conclusion. There is no absolute control by the foreign entity on the Indian entity. I am not very sure about this because there is no reasoning in that judgment. Because the department clearly says all decisions are taken by foreign recipient. So how the court said absolutely there is no control? I don't see, because in other cases they have reasoned. For example, 110% markup, they said no, it is common. It is there in all the companies. And this markup alone will not say they are agent and principal. So some reasoning is there. But on this basis, how they came to the conclusion, the court came to the conclusion that the foreign company is not exercising control over the Indian entity. That is not clear. Just because they are incorporated here. Then even assuming maybe services rendered by using the manpower, it will qualify as export of service. But in this case, it seems they have supplied goods also. And it is not stated they are manufacturer of goods, Sundyne. So in the case of goods, then definitely if they are not manufacturers, they must have purchased from another party. So in that case, there are three parties involved. Even in such case, will they become, even though the definition of export of goods is different than export of services, I'm saying if but export of, so this question may not be relevant because the export of goods is a separate definition. So leave it. Then the fourth one is the as far as tax matters are concerned, the previous orders passed by the tax department cannot bind the authorities in the subsequent years because every year of assessment is independent. So they can always check into the previous years, even though there was one Supreme Court judgment which said if the same set of facts are there, then it will bind. But I am not very sure because each unit, it's a unit of assessment. They can always, the department can look into the subsequent years and subsequent refund claims and they can check. That is not what my humble opinion about the subsequent refund claims are concerned. Thank you very much. Have a great day.